Good morning, traders. It is Thursday, January the 25th. Taking a look at the charts, I'm going to go over a couple new things this morning, showing some price spikes and where the markets are headed. But more or less, again, we are in that time of the market where we should start to see some sideways and some volatility start to creep in, very similar to what we had during the last market cycle, and we had another cycle top over here as well. So the bias is going to be sideways more or less in the market until we have a new cycle low, and then we can see another expansion phase in equities, and that's where we're at, potentially for a month or two here that could fall out of favor. Now, if we take a look over at our trend analysis, this is the SP 500 30-minute chart. It's overlaid. We've got this stair-stepping line here. This is a 5-day moving average overlaid on the intraday chart. This green one here indicates the trend direction, which green is up. It's also the 20-day moving average. And then we got this 34 period moving average as well. And what we're looking at is yesterday the markets came down and they tagged the 5-day. And whenever the market hits the 5-day, when you're trading above it, it acts as support. You can see more or less we had one bounce here, another bounce here. And it bounced yesterday and came right off that level. And intraday, we did have a little intraday oversold signal right as it tagged that level, and the market bounced right back up to close fairly strong on the session from where an intraday bounce level was. Now, the last time we had a significant pivot low in the market, we had a signal here which we took. We caught this first move. The market's extended much further than we anticipated. We did catch this really nice strong move right away with back-to-back about a 5-day run higher with the QQQ ETF. And we are in, this just goes to show how strong of a bull market we're in. The market was forecasted, expected to move here, which we did play that and get out right up near this top. But you can see how much further the market has gone. And that just shows how strong this bull market is. And here we are, a minor little reset. And the market, I am hoping we do see actually a deeper correction going forward. We do have this oversold hash line right here. It adjusts as technical analysis, volatility, all those things adjust. So it could potentially stair step its way up, and we could see an ABC correction, A, B, C, bring us into oversold. We could see some panic selling because we'll break the 5-day, we'll break this previous pivot low as well. So hoping we're going to get another technical setup just like we saw back over here. If we go back in the chart even further, the last time we had another one of these oversold technical setups was right over here. The market again had a nice 5 or 6 day run, and then ended up squeezing a little bit higher and then consolidated. And this is where we had our last entry signal in the market for the next quick run. So we're waiting for another one of these plays to take advantage of. At this point, these little tests of the 5-day are short-term momentum plays. You can see it tags it. You see a strong pop, you tag it, strong pop, tag it, intraday pop. We could continue to go higher, but these little technical levels are very tradable for short-term traders. But we're not really too focused on getting into the intraday. We're looking for swing trades in these key setups in the market to catch these swings to the upside. Now let's just take a look over at the VIX real quick. The VIX is continuing to hold up. I do feel as though we could potentially see another pop in the VIX if we see the equities market sell off for that ABC correction over the next couple sessions. Again, nothing huge, not a big sell-off in equities by any means, just a 1 or 2 day weakness, and we could see this pop back up into the 14 range, maybe 15 range, similar to these wicks, these high wicks here. We could just see an intraday pop in fear, and that could reset the market, and the VIX could fall back down, and we see equities continue to chop and grind their way higher going forward. Now taking a look over at precious metals, big pop there in the last session, and we're coming right up near this previous high, this 1375 area, potential significant breakout. We do have our cycles starting to top out. We have 1 surge, 2 surge, 3 surges to a high, significant resistance, another overhead resistance area, and more or less we got cycles looking like we could see a pretty good correction coming forward. Now we'll see how things reverse if we get a reversal type candle, but we are anticipating still to see a pullback and a consolidation that could last here a month or so as well in the precious metals. Looking at silver, big pop out of silver here. We had a nice big run up, tight bull flag. It has broken out, flirting with these recent highs, and it's holding up there today. And again, there's still upward momentum for silver to get near this previous pivot high equal to where gold is trading. So there's more room for silver to continue to kind of mature and squeeze higher here going forward. Looking at gold miners is a little more volatile. It actually looks a little more like a topping formation. We've got this one surge, two surge, and this final surge with a big gap. It ran up and sold back down. That it feels like it's a three surges to a high, and this is just kind of my own little signature pattern that when you have these three surges with very sharp gaps or corrections right after them, you can find the market will stabilize and then actually have a fairly decent pullback after that to more or less consolidate before it starts another run, potentially going higher. So we're getting into this volatility that the bulls and the bears are fighting and struggling, and usually it means we're going to see some type of correction in the market, or at least a consolidation before we see a larger breakout. Looking over at natural gas, the last couple of days we had the big pop. It's trading sideways in this range here. It's trying to carve out a top. Obviously, we've got some news and cold weather fronts moving in, helping definitely lift this. But we'll see if we get a reversal. More or less, we started to see some selling in the intraday charts of some increased volume selling. So we saw distribution selling intraday and then light volume kind of drift back up. So we'll see if this starts to roll over or gives us a topping candle. We are still in a net short position, potentially adding to the position. If we do get a final pop and squeeze higher on in the natural gas, we could add to our degas position for an imminent kind of reversal and play back as it falls back down with this kind of news-based, weather-based pop. Usually these type of pops get sold back into. It's just a matter of that momentum stalling out. Crude oil up 1.4%. Crude oil had a nice tight bull flag. It was looking like it wanted to top out, and it's broken to the upside, continued to expand higher. Looks like it's going to close at this point above the $62 per barrel mark on a monthly basis, which is technically going to kickstart it into a new bull market. If we just look at this pattern, you can see this big bottoming formation came up, built a launch pad, got to this resistance, traded sideways at this 62 for a while, and now it's popping and at this point trading above it. But if for some reason it sells right back down and closes below 62, be very much a reversal candle, and we could see it sell back down for a month or two and consolidate before potentially taking another run back up to this 80 mark, which is going to be the next major target. But that's where it's headed. If it doesn't correct, it should go right to around the 80 mark going forward, $78 to $80 per barrel. And this is a long-term signal, and we got to see where the monthly close is going to be. Last but not least, just touch on Bitcoin. Bitcoin, very pure, very emotional play. It's not quite as manipulated as the equities market. A huge price action, so everything gets dwarfed. But more or less, we've had a huge run up. You get back into this correction and then kind of flatline before it does the same thing. So here we have the big run up, the correction, the bounce, and here we are trading. I wouldn't be surprised if we see it move down a little bit more, but overall, it's stabilizing and could potentially continue to move up after this consolidation. And we've got, in another week or so, we've got cycle lows bottoming in Bitcoin where it could start to build a base, trade sideways before we start to see the next pop and potential rally going forward. So that's where we are in the Bitcoin. But Bitcoin has had it's tough to say. The way Bitcoin moves is a little different than the equities market. Technically, in the equities market, when you see a massive run up, and then you give back half the move and consolidate, usually that bubble is over and then it takes years to come back, like the NASDAQ 2000, 2001 top. But the way Bitcoin moves is it does this repeatedly. It goes up, loses half its value, consolidates, goes up, doubles again or quadruples, and then loses half that value again and does the same thing. And it's been doing that going way back in time. You zoom back, it's dwarfed here. Obviously, you go back, it's just this pattern repeated. Not saying this bubble is over by any means. It feels as though we're getting close to that euphoric stage. I'm hearing radio ads to go buy Bitcoin, and you buy it with your credit card. And usually, when the media is in, that's when you get these huge moves. And then finally, the fizz is over. So we are definitely, this is a new phase compared to these other ones. We are now mass media, public, average trader, average person actually just buying Bitcoin. They have no idea really what they are. They just want in. And that's the sign. They got to be very aware that this could be the top, or we might have another push over the next couple months. And I'd be very wary about going to new highs and be looking to, if you're in it, be trimming off some money and accept that you've got huge moves and you're playing it safe. I also just wanted to quickly touch on price spikes are starting to come back in the market, and if you don't know what they are, more or less the SP 500 with certain filters removed, we get these post-market. They either happen just before the market opens, somewhere over here. This dark time here is regular trading hours. You either get a price spike in pre-market or a price spike in post-market, and it seems to be the computers of the big players give you a flash of where the price is likely to go next. And last night we did have a price spike. It was a spike to the upside. We usually expect a third of the spike to get filled or half and 100%. Those are levels that if you're trying to trade it with futures, pre-market, post-market, you'd be looking for pulling money off quickly at those levels. Most of the times a third of it gets filled really quickly, but then it can reverse over. But long story short is the spike came up and it was tagged more or less this morning. And if we just go back in time, this is the SPY ETF. If we just go back, I'll just zoom back. You can see we had another spike over here, a spike to the downside, and price over the next throughout overnight trading came back down to fill almost half of the price spike before going. It just shows where the computers and the big players are trying to run price to. There was another one back over here. Let me just zoom in a bit. A few days ago, we had another price spike after the market had closed to the downside. The next morning, the market gapped down, tagged that level, and then it took off. So these are just kind of levels where the big market players have got computers set. It seems to kind of tip their hands so we can see where they are trying to move price before a price reverses again. And so we're getting back into that type of price action, and I'm going to start sending out some charts in pre and post market. Just a quick snapshot of the chart showing where the direction is and where it's likely to go in the next 24 hours or the next trading session. Anyways, that's it. Take care.